Bhaskar, hi, good morning. Good to chat with you. And let's start off with China, considering that's really hogging the limelight daily. What is the sense that you're getting about how grave this problem in China could get? And, because clearly for the equity markets, we're seeing no respite come in. It seems like this is just the start of a, bear phase for China?
Well, if you were to really look at it from two perspectives, one, if you were to look at the A shares, they are still up significantly as compared to the other markets. In fact, it's outperformed MSCI Asia ex Japan. So I would see it as part of it is giving back the gains. The head shares are actually the ones that are listed in Hong Kong, the Chinese shares, are actually didn't go up all that much, and they've lost value as well. They're in the negative territory. The fundamental problem, though, in China is that growth is being an issue, and that's going to continue to come back and haunt the Chinese markets.
Do you think the problems in China, and when I say China, not just Chinese stock markets, the Chinese economy could have a domino effect? After all, China is the second largest economy in the world, and if the second biggest economy in the world is going through a painful adjustment, I'm sure that will have an impact on global growth.
Of course it does, and it's already having a significant impact in terms of global any kind of global things that you can think of. Commodities is a clear example, which has been severely affected by what's happening in China. Having said that, China has got some great competencies. It's got, for example, manufacturing excellence. Its ability to be in part of many supply chains is still extremely dominant, as important. So I think there are many positives. The fact is, yes, as China slows much more than what people expect, it is going to have a little bit of ripple effect. Now, does it completely derail global economy? That will depend on what kind of pace of decline that we see. That's not the base case, but if you were to see something that was a shock to the system, yes, then you could have that.
So how are investors then, Bhaskar, contrasting between India versus China? Because a lot back home here believe that, China's loss is India's gain. But going by the way that our equity markets as well have been getting volatile every day, it seems like we're rocking in the same boat.
Well, I wouldn't necessarily call it as China's loss is India's gain, but I would think these two economies are in two different parts at this stage. China is consolidating, having grown at an aggressive pace for over 15 years. India is embarking on a growth phase that can last for the next decade. So I think they are in completely two different segments of growth. So from an economic point of view, I think India is really well positioned. Despite whatever you're hearing and seeing in China, I think the impact to India from an economic sense is a little more limited. Now, markets obviously tend to move in tandem. Therefore, when there is sentiment factors, there is flow factors, these obviously impact all markets wherever you are. So, and I think that's what you're seeing with India. So when the region gets hit, you color everything with the same brush.
India, the only game in town. Frankly, if I look at the global environment, China is contracting, Brazil is in a mess, US economy, the growth is uneven, and I'm keeping my fingers crossed that nothing happens to Greece next.
Well, okay, I mean, Greece is, to me, less of an issue. But I would say the game in emerging markets, I would say, is India. But I would say it's still a developed markets world, whether you like it or not.
Is India a crowded trade? That's the sense I get from some of the global money managers, global wealth managers, that look, we know the India story, we like the India story, but the problem with the India story or the India appeal is that it's an expensive market, it's a crowded market, and it has been on the radar for foreign investors for many years now.
I wouldn't call it as a very expensive market simply because, like I said, just the ability to grow. Now, here is where execution really matters, and therefore I think the investors really need to see a little more action in India in terms of what's happening on policy making, on new investments, money flow, FDI, the corporate game. We haven't seen a huge amount of corporate change in India, both in terms of investments or in terms of profitability. So I think those are the things to watch out for, but the potential for that to happen is quite real. So I would stay actually long India. Like I said, I would possibly put that as the top pick in emerging markets globally.
So if given an option, let's say, to construct a portfolio where you don't have a bias, you don't have a market cap constraint or a company constraint, but if you're looking at absolute return and if the shelf life of that portfolio could be 3 to 5 years, how would you allocate capital? Where would you allocate disproportionate amount of money, and what are the pockets you would like to avoid?
Well, I would say that in that sense, emerging markets have, if I were looking at a 5-year horizon, for example, I think actually emerging markets in general have a place because they're so beaten down. I'm not saying in the next 3 months or the next 6 months they're going to recover, but if I had a 5-year time frame, that's clearly something that I would still be in. But I also think that the US economy is something that you cannot ignore. I think it's going to go from strength to strength. So that I would certainly have something like a 45 to 50% bias towards the US, 20% bias towards Europe, and a 30% towards emerging markets.
And the big question mark then, Bhaskar, finally, when do we see a Fed lift off? Because a lot in the globe and the way equity markets are going to perform depends on that.
I think 2 things are getting debated every day. One is the timing and the quantum of that move. I think people have gone from half to 1/8, 25 basis point to 1/8 in terms of the incremental move. That's getting more and more popularity. It's also becoming more popular that the September move might get deferred to a December move, largely because of what we have seen in recent times. China has been a big impact in terms of that thinking.
Right, sir, appreciate your time. Fantastic to have you on ET Now, and certainly look forward to much more of you going forward.
Thank you for having me. Thanks.